Hi, I'm ReShawna Leaven with Keller Williams Realty. So I want to discuss what the final closing disclosure will look like. You will receive an initial closing disclosure and it will look the same, but this is what's the final one from a previous settlement that I've had. So I want you to understand what to look for and to not be surprised the first time. You will see this form, but it's beneficial for you to see all the cost on there, so you will know once it gets down to it. So you see at the top it'll say the date that it was issued. That will be your closing date, and closing date, that's the amount. The date that it was dispersed, that's when they disperse all the funds. The title company information is here. A file number, I deleted that for privacy. The property address, I deleted that for privacy. The sales price, that's the sales price. The borrower's name is here. The seller's name is here. The current lender. So this is for a NACA transaction if you're watching this, but it's good for any transaction, but some things on this particular closing disclosure only pertain to NACA. So, but if you're watching this may not pertain to you if you are not if you're not purchasing a house with NACA. So the loan term is 30 years. NACA does offer a 15-year loan if you decide to do that. Product is a fixed rate, it's a conventional loan, and then the loan ID would go here, which is the loan number. So these are the loan terms. So this is the sales price. Cannot increase after closing. The current interest rate, that's what the interest rate is. This is the principal and interest payment only. And prepayment penalty, there is no prepayment penalty, no balloon payment. And this calculates from year 1 to year 30 what the projected payments will be. So that's the principal and interest. And then this is the estimated escrow. That does not account for the actual homeowner's insurance because they do have to calculate that for qualifying, but it's not going to be in this because that's paid separately. So altogether, this is the total mortgage payment here. Estimated taxes and insurance, this includes the property taxes, homeowners insurance, and HOA fees. So HOA fees are not escrowed. That's something that you have to pay for separately. Then this is the closing costs total, and this was the amount that my client actually was getting back. So if you ever see a negative in front of this cash to close, then that means you're receiving money back. If there is no plus in front of the dollar sign, that's the amount that you actually have to bring. So that's here. So this is the next page. So this is a breakdown of how they got to the total closing cost amount here. So at the top, because this is NACA, there is a brokerage fee of $3,000, which is a lender paid fee. So anything with an L beside it is what NACA pays for or Bank of America pays for. So the appraisal fee was $822.50. Appraisal fee, the service link, there was a charge there. The buyer had to pay for the credit report up front, and then they gave them a credit back for that. There was a tax certification. All of these are title charges. So all of those things the lender paid for. And these are things that the buyer could shop for. Home inspection is required, so that was $600. They don't get that back, but that's the amount that they actually had to pay for out of pocket. So now we talk about other charges. So this is taxes and other government fees. So recording fee for the deed and a mortgage. So that's $133. So there are tax stamps for each city, county, and for the deed and for the mortgage. And all of those items were lender paid. So everything above the F line, the lender pays for. All the other items, the buyer is responsible. And I think that is what causes so much confusion with NACA, because buyers tend to think that some of those charges are for the lender, and those are not fees that they are going to pay for. So that's really important for you to understand. That's why I wanted to create a not necessarily a webinar, but a video on what to look for and what to expect, especially if you're planning on buying your interest rate down. So you got to make sure you still have enough money for all those other items as well as your buy down amount. So next, so F. So these are prepaid items. So your homeowner's insurance, that was for 12 months, and there's no PMI, no mortgage insurance, so that's F2, so there's 0 there. So this is interest, so they're paying for interest for 1 day because they close at the end of the month. So depending on when you close, it would be from that day until the end of the month. And starting the escrow payment. So they also call this, when you actually get to settlement, it's called an impound account. I don't know why they call it impound, but that's what it is. So homeowners insurance, they collected for 3 months for that. And property taxes, they collected 5 months for that. But for laws and regulations, they can only keep a certain amount in that account at one time. So they actually gave the buyer a credit for that amount because they have to collect it, but they can't have but a certain cushion amount over that. And because this was new construction, that's why I selected this one, so you would know. If you're buying in a brand new community, a lot of times, well, I would probably say 99% of the time, you do have to pay what's called a capital contribution to the HOA. So that's a one-time fee. You don't have to pay it anymore, but because it's brand new, you have to put money into that. And then the HOA dues, they usually do at least 1 or 2 months, so it'll bring you current to whenever your payment is due. And then the real estate commission, I zeroed that out, but that is for the seller to pay. The seller pays that. And owner's title insurance is optional. It's not required that you do it, but it protects you in the event something happens with title at the, it protects you basically for as long as you live, really. So it's a good thing to have it, whether you're buying new or not, and with the enhanced policy, because things do happen and you don't want to have issues with that at a later time. So all of those items added up with the seller credits, well, lender credits, that's where this 5084 came from. Now, the next page shows you what the loan estimate, what the original loan estimate was and what the final amount is. So the original loan estimate, they were expecting to bring about $1,500, and then they ended up giving money back. So, and then you'll see this amount, well, not this amount, well, this actually calculates how much the transaction was. So this is the sales price, the closing cost, and this is the earnest money deposit, and this is the loan amounts, and those two items added up, and then that's how you get that. So I hope this was very helpful to you. That's all for this video. Thank you for watching.